So are we set?
Recording in progress.
Yes. Welcome, guys, today to our webinar and continuation from last year. We talked about a lot of things as regards the Forex market. We started with basic Forex market terminologies like pips, bullish, bearish, margin, the meaning of all these terms. And we moved down to strategies on how clients can trade on the financial market. We talked about a whole lot of things last year. So I want to welcome you all to our first webinar of the year and of course, many more webinars to come. The main aim of this webinar, of course, is to make sure every trader, both experienced, both beginner and advanced level traders, understand what really moves the market, understand key things about the financial market. So it's very important that we have our listening ears as regards whatever information we'll be dishing out from our webinars. And ZTradex, of course, provides you with the best and not the least. So whatever information you get from us, you understand that you get from top analysts, you get from the experts who understand the market with years and years of experience. So with all that being said and done, I want to welcome you all to today's webinar as we kick off. So today we will be talking about Forex news and market data, basically. And we should have an understanding that the financial market is basically being moved by Forex data, Forex news and economic news events. These things are actually what move the markets. So with all that being said and done, please kindly move to the next page so that we can kickstart. So right about now, first we'll be talking about trade balances, present and the future of Forex. Now, trade balance, or let's say balance of trades or net export, measures the ratio of export to imports for a given economy. Now, why did we start with this? Because actually, in the whole sense of it, financial news, economic news demonstrates the demand of countries' goods and services, and ultimately its currency as well. Now, for instance, if exports are higher than imports, we have a higher tendency of trade surplus exists, and the trade balance is quite positive. It tends to import higher than exports, and the trade deficit must exists rather, and the trade balance is definitely negative. Now, exports greater than imports equals trade surplus, which equals positive plus trade balance. Also, imports greater than exports equals trade deficit, which equals negative minus trade balance. Now, what are trade deficits? Basically, trade deficits have the prospect of pushing a currency price down compared to other currencies. Now, we have net importers first have to sell their currency in order to buy the currency of the foreign merchant who's selling the goods that they actually want. In the whole sense of this, let's say, for instance, when there's a trade deficit and you have local currency being sold by foreign goods, because of this, the currency of that country with a trade deficit is less in demand compared to the currency of a country with a trade surplus. Now, we have net exporters, we have countries that export more than they import. We see their currency being bought more by countries interested in buying exported goods. It is more in demand, or let's say you're helping their currency to gain value, and it's all due to the demand of the currency. Currencies in higher demand tend to be valued higher than those in less demand. Now, it's actually very similar to pop stars because there is more in demand. For instance, we can say Taylor Swift get paid more than Pink or any of these artists. Same thing, Justin Bieber versus Vanilla Ice and other artists. But then it's very important to know that these things just have a pure reflection on the economic news, economic financial data, and all of this. Now, the government, the present, and the future. The years 2009 and 2010 had definitely been the years where more eyes were, glaringly watching their respective countries' governments, wondering about the financial difficulties being faced, and of course, hoping for some sort of fiscal responsibility that will end the woes felt in our wallets. Now, instability in the current government or changes to the current administration can have a direct bearing on the country's economy and even neighboring nations. And of course, any impact to an economy will most likely affect the exchange rates. Okay, so next page, please. Now, which brings us to a very important topic, the Forex news and market data, where to find them. In the past, we have quick, searches, Yahoo, Google, Blink, and the rest of them. Google most importantly. You search for Forex plus news or Forex data, and it returns massively, like 30 million results combined. But then the information is king when it comes to making successful trades. There's just a way too much information, of course. You try to process, and way too many things can confuse that newbie trader if you're a new trader. Now, currency price moves because of all of this information, economic reports, new central bank chairperson, and of course, interest rate changes. Now, news move fundamentals, and fundamental move currency pairs, right? I want you to understand this clearly. News moves the fundamentals, and the fundamentals also move the currency pairs. Now, it's your goal as a trader successful to make successful trades, and it becomes a lot easier when you know why price is moving than what it is. So successful Forex traders weren't just born successful. They were taught or they learned. Are you getting it? So successful Forex traders don't have mystical powers except for people crawlers, but we have some weird and mystical things and you can't see in the future. So what they can do is see through the blur, which is Forex news and data, pick what's important to traders at the moment, and make the right trading decisions. Very important. Make the right trading decisions. Now, where can you find this Forex news and market data? How to put them into action? Market news and data are available through a multitude of sources. The internet obviously expands day by day and provides wealth of options at the speed of light, directly from your phone screen with access from the internet almost anywhere in the world. But do not forget about print media and the good old tube sitting in your living room or somewhere around. Now, individual Forex traders will be amazed at the sheer number of currency-specific websites, services, TV programming available to them. And most of them are free of charge. Are you getting it? Why you may have to pay for some of the others, but most of them come free of charge. Now, we have traditional financial news sources. We look at Bloomberg, for instance, number one, top to me. We talk about Reuters, we talk about the Wall Street Journal, we talk about Market Watch. Now, while there are tons of financial news resources out there, we more or less advise you to stick with the big names. These guys provide around the clock coverage of the markets with daily updates on the big news that you need to be aware of, such as central bank announcements, economic report releases, and analysis, etc. Many of these big players also have institutional contacts that provide explanations about the current events of the day to the viewing public. So real-time feeds, you need to check these websites, Reuters, the Wall Street Journal. I specifically follow Bloomberg and MarketWatch.com. These two are one of the best, to me, they feel like the best, and I usually follow them each and every time to better understand the direction of the market and to be able to rack up good profits from all of this. Next page, please. Now, financial TV network exists 24 hours in a day, 7 days in a week, and provide you an up-minute action of all the world's financial market. I want you all to understand this. If you're looking for more immediate access to movements of currency pairs, don't forget that you need to understand that real-time data comes from your Forex trading platform. Many Forex brokers include live news feed directly in the software to give you easy and immediate access to events and news of currency market. You check your broker for availability of such features, and also you would understand that economic calendars come based on countries' economic events. So it would be great if you could look all the current month and know exactly when the Fed is making an interest rate announcement, which is very important. What rate is forecasted, what rate actually happens, and what type of impact and change this has on the currency market. It is all possible with an economic calendar. So these are why economic calendars are actually very important when you're trading on the financial market. They give you a foresight, an overview, and a prediction, a futuristic prediction of where the market sentiments are actually heading to. Next page, please. Now, the good ones, of course, we'll take a look at them. You are able to sort out currencies, let you assign local time zone, and economic events data reports take place more frequently than most people can keep up with. Now, this data has the potential to move markets in the short term and accelerate the movement of currency pairs you might be watching. Okay, and luckily, most economic news that's important to forex traders is scheduled several months in advance. So you can be expecting the news like 3 months before. You already seen it on one of these websites like Forex Factory, for instance, and you have an idea of what is going to happen in 3 months' time based on what the Fed is going to announce, based on the previous news events, and based on the forecast. Also, most importantly, based on what news events you've been following or you've been listening to concerning that currency's economy or that country's economy. So, which calendar do we recommend? This is a very important question. We look no further than our very own Forex economic calendar. I recommend Forex Factory, and there are a couple of them out there, but this Forex Factory usually comes in uh, various forms. It comes in high impact news events, it comes in um, low impact news, and then medium impact news. So you need to keep it in mind, the timelines of the report you read, and a lot of this stuff have already occurred, and the market has already adjusted prices to take their report into account. Now, if the market has already made its move, you might have to adjust your thinking and current strategy. So you keep tabs on just how old this news is, or you find yourself yesterday's news. Now, you also have to be able to determine whether the news you're working with, what is the fact or fiction, if it's the rumor or is it an opinion. Economic data rumors, they actually do exist, and they happen several minutes or even several hours before the scheduled release of data. These actually speed up or spark up wrong directional movements of the market, of course, before maybe the rumors now help to produce some short-term trade action, and then sometimes you can have a lasting effect on the market sentiment. Now, also, institutional traders are often rumored to be behind large moves. It's hard to know the truth with the centralized market like the spot forex. There's never a simple way of verifying the truth, of course, but your job as a forex trader is to create a good trading plan and quickly react to such news about rumors. And after that, they have been proven or let it be true or false. You're having a well-rounded risk management plan in this case, which of course could save you some moolah, some cash, greenbacks, call it whatever you want. And the final tip is you know who is reporting the news. Very important. You should know who is reporting the news. News events can just come from anywhere, fake sources and all of that. So it's important you know who is reporting the news. Next page, please. Now, As regards knowing who's reporting the news, the more you know about the who, the better of you should be understanding how accurate the news is. Those who report the news often have their own agenda and have their own strengths and weaknesses. Get to know the people that know, so and all of that jabbing. But market expectations to news and their impact on currencies actually matter. There is no one all in or bet the farm formulas for success, which comes with predicting how the market will react to data reports or market events, or even why it reacts the way it does. You can draw on the fact that there's usually an initial response, which is usually short-lived but full of action. Okay. Now, later on comes that second reaction where Forex traders have had some time to reflect on the implications of the news or report on the current market. It's at this point when the market decides if the news release went along with or against the existing expectation, and it is reacted accordingly. Now, was the outcome of the report expected or not? And what does the initial response of the market tell us about the bigger picture? You're answering those questions gives us a place to start interpreting the ensuring price action about the whole market. Yeah, about the whole market. So that's just basically what we need to, pack into our heads when we're understanding market expectations, the news, and their impact on currencies. Next page, please. Consensus market expectations, very important thing. Now, a consensus expectation, or let's call it a consensus, is more like a relative agreement on upcoming economic or news forecasts. Economic forecasts are made by various leading economics from banks, financial institutions, and of course, other security-related entities. Now, your favorite news personality gets into the mix by surveying her in-house economists and collection of financial sound players in the market. Now, all the forecasts gets put together and averaged out. And it's these averages that appear on charts and calendars, designating the level of expectation for that report or event. And of course, the consensus becomes more like ground zero. The incoming or actual data is compared against the baseline number. And an incoming data normally gets identified in the following manner. One, as expected, which is, let's call it the reported data, which was close or at the consensus forecast. I hope you better understand it as well. Then two, better than expected, which is the reported data was better than the consensus forecast or was better than what was predicted. Then we have worse than expected. So whether or not incoming data meets consensus is an important evaluation for determining price action. So just as important is the determination of how much better or worse the actual data is to the consensus forecast. Larger degrees of inaccuracy increase the chance and extent to which the price may change once the report is out. Now, however, let's remember that Forex traders are smart and can be ahead of the curve. And also, the good ones anyway, many Forex traders have already priced in. I'll leave you with that. Consensus expectations, trading plan, market sentiments, these have all been looked to before the report is scheduled. And of course, pricing refers to traders having a view of an outcome of an event and placing bets on it before the news comes out. Now, the more likely a report is to shift the price, the sooner traders will price in consensus expectations. How can you tell if this is the case with the current market data? Of course, that's a tough one for some people to understand. Next page, please. So that's all we have to do about today's webinar. Understand the major fact summary on this. Number one, have your news data up, choose the website. I go with Forex Factory. Some people go with Bloomberg. Some people go with Market Watch, but I go with Forex Factory. And sometimes I go with Bloomberg with my TV turned on as I listen to economic news events. And also I check Forex Factory. Now in Forex Factory, you have three folders: high impact, which comes in a red folder. We have medium impact, which comes in an orange folder. And we have low impact, which comes in a yellow folder. Gives an automatic overview and understanding of what impact news or what news events actually carry maximum impact following the news events that need to happen. So with all that being said and done, I want you all to understand that these things are very important. Economic news events, very important when analyzing and trading successfully on the financial market as a professional. So with all that being said and done, thanks for your time. Enjoy your weekend. Happy trades to everyone. Bye-bye.